Welcome to our Market Explainer. You know, on February 23rd, 2026, the market was telling one story for most of the day. And believe me, it was not a good one. But then, in the final couple of hours, the entire script just flipped. So let's break down exactly how this late session comeback actually happened.
One number. This one number tells you pretty much everything you need to know about today. 25,713. That is the crucial level the Nifty 50 clawed its way back to after spending almost the entire day deep in the red. But just looking at that final number doesn't even begin to capture the drama. Seriously, this wasn't just a simple day of gains. It was a full-on comeback story, a late-session surge that completely rewrote the narrative of the day.
So, let's rewind the tape a bit. We're going to see exactly how this comeback story played out, pretty much hour by hour. Okay, so here are the headline numbers. The Nifty 50 closed up over 0.5% at 25,713. The Sensex was right there with it, posting a similar game. But here's the kicker. The most important detail on this slide isn't the number, it's the timing. All of this key action, the entire surge that pushed us into the green, it didn't even get started until after 2 p.m.
Now, a comeback like this doesn't just happen out of nowhere. To really get it, we need to pop the hood and look at the forces that were really battling it out in the market today.
And this right here perfectly captures the tug-of-war we saw. I mean, on one side, pulling the market up, you had the heavy hitters, infrastructure, private banking, and FMCG stocks. But on the other side, fighting them every step of the way, you had this persistent selling pressure from the IT and metal sectors just trying to drag everything back down.
Well, in the end, the bulls won that tug-of-war. By closing where it did, the Nifty managed to climb back above some really important short-term trend lines, what traders call key moving averages. And that, for a technical analyst, is like a green light. It suggests that sentiment is shifting away from being bearish and back towards a more neutral, maybe even slightly bullish, stance.
So we know the trend is improving, but what about the market's overall mood? Well, we can decode that by checking a few of its vital signs, some key technical indicators.
First up, we've got the RSI. Think of it like the market's momentum speedometer. It's now sitting at 51.54. Now, the number itself isn't the whole story. What's important is that it's above 50 and it's rising. That tells us that the market's upward momentum and its underlying strength are actually improving.
Next, let's take the temperature of the crowd with the put-call ratio. A reading of 0.97 is, well, it's very close to neutral. It tells us that even with that strong finish, traders aren't exactly getting euphoric just yet. There's still a healthy dose of caution out there for sure.
And finally, the VIX. Everybody knows this one as the fear gauge. And look at that. It cooled down by over 2.5% to just under 14. A falling VIX is always a good sign. It suggests that the anxiety we saw earlier is starting to fade, which creates a more stable environment, at least for the near term.
Okay, so we've seen the big picture. Now, let's get a little more granular and look at the real movers and shakers, the specific companies that were making all the headlines today.
On the bull side of things, Adani Ports was a clear engine behind the recovery, jumping almost 3% on some really strong volume. ICICI Bank and Kotak Mahindra also pitched in with some key support for the banking index. But it wasn't all sunshine and roses. Take a look at Reliance. Even though it gained a little, it saw a huge volume of put options. That suggests some big players are hedging their bets. And then you have UPL. Wow, the day's biggest story, dropping almost 17%. The clue there? A massive surge in open interest, which basically means a ton of new bearish bets were placed against the stock today.
And a few others were definitely on our radar today as well. BHEL had a pretty significant jump in volume. Colafin reversed nicely right off a key support level. And Radico showed a positive technical crossover. All of these are worth keeping an eye on tomorrow. So that's the story of today. But what about tomorrow? Right, let's get you set up with the key levels to watch. These are basically the battle lines for the next trading session. This chart here lays out the path forward perfectly. I want you to think of it like a price ladder. The immediate floor, right, the first rung of support, is that zone between 25,500 and 25,600. Below that, you've got a much stronger safety net down at 25,400. Now looking up, the first hurdle we've got to climb is that 25,850 to 25,900 area. And the major breakout level everyone is watching, the top of the ladder for now, that's the big psychological number, 26,000.
So, after today's pretty dramatic comeback, the stage is set. We've got improving momentum, indicators pointing up, but we've also got some significant hurdles lying just ahead. And that leaves us with the big question heading into the next session, doesn't it? Will the bulls have enough power to follow through and break higher? Or is that caution we're still seeing in the options market going to win out? We'll be watching to find out.